U.S. financial news today. The U.S. economy continues to show surprising strength. The Commerce Department has just released new data. The GDP growth rate in the second quarter of 2025 was revised up sharply, reaching 3.8% year-on-year, significantly higher than the previous estimate. The reason comes from the recovery of consumer spending, vibrant business investment, and reduced imports. There are also positive signs in the labor market. Initial jobless claims fell to about 218,000. However, many experts warn that the pace of hiring is slowing, suggesting the labor market is less hot than it was last year. Wall Street opened in the red. Major indexes such as the Dow Jones, S&P 500, and Nasdaq all came under selling pressure as investors worried that the Fed would be more cautious in cutting interest rates this week. U.S. stocks are on track for a third consecutive week of declines, with technology stocks being particularly hard sold. Another factor that is making investors uneasy is the risk of the U.S. government shutting down due to a budget impasse in Congress. If this scenario occurs, many important economic reports, such as inflation and employment, will be delayed, making it difficult for the Fed to make policy. Meanwhile, gold prices remain stable as the U.S. dollar cooled. Investors are waiting for the PCE inflation report, an important measure to predict the Fed's next move. The U.S. dollar remains the world's reserve currency, but some studies warn that new tax and trade policies could weaken that power in the long term. However, international capital is still flowing strongly into the U.S. market, especially into technology and artificial intelligence stocks. In summary, the current U.S. economic picture remains quite solid, but financial markets are being affected by monetary policy, expectations and political risks.